Crude oil recovers today up just under 0.5% in the energy markets. Big range today, up 1.25% on the highs, but we're still looking at a crude oil contract that is down about 5% on the week, getting down into the the high 65s, getting up above 66 yesterday, getting up above the 67 handle on WTI today. Much of the recovery due to the gasoline draw. The EIA figures were released yesterday, and while crude oil showed a build of 6 million barrels, the EIA gasoline showed a draw of 4.8 million barrels. A little surprising there, considering this is the weakest month for demand. It could have been a little bit of pent-up demand and a little bit of excess in the summer driving season, kind of an extension of the driving with some of the mild weather that we've had across the U.S. We did have a quick bump up in refinery utilization rates, going from an 88 handle to 89.2% this week. So it looks like those inventories may get replenished. Certainly no shortage of supply, as we're seeing crude oil above the 5-year average by about 2% and gasoline still above the 5-year average in terms of storage, inventory stored by about 6%. The Brent WTI spread is also in focus. It's come in a little bit. It's starting to weaken, which shows you that the excess production from OPEC generally and Saudi Arabia specifically, along with Russia, is bringing the price of Brent down a little bit, and some of the cost constraints are not quite easing the WTI price along with Brent as much, relatively speaking. Again, we are down 5% on the week in the WTI pricing structure, but overall Brent has been weaker than WTI for the last 2 days.